Welcome everyone. Today we are talking about a question that most of us think about, but a very few calculate correctly. How much life insurance does a family really need? By the end of this session, you will not only understand the answer, but you will be able to calculate it for yourself very confidently. So now let me start with a real story. Kavya came to me after her husband passed away. She said he had insurance, but the money ran out. Imagine the fear behind that sentence. That conversation changed how I explain insurance forever. Most of the people think the question is, do I have insurance? The real question is, do I have enough insurance? Today, we'll answer that scientifically. So, most of the families buy insurance randomly. Someone suggests a number, they choose what feels affordable, or they pick a round figure, but the financial decision cannot be random. They must be calculated. Insurance is not about you, it is about the people who are dependent on that income. It's a protection plan for your family's future, not for a product for you. Let us analyze a real calculation. See, policy value looked decent, but actual financial responsibility was more than 1 crore. This is the gap most of the families don't realize until it becomes too late. Having insurance does not automatically mean we are protected. Underinsurance is actually more dangerous than no insurance because it gives false protection and confidence. Why people are underinsured? These are the top reasons why families don't have enough cover. Notice something. None of these are financial problems. They are awareness problems. Insurance should be calculated like a financial formula, not purchased like a product. Once you understand this, everything changes. Now, I'm going to show you the exact method professionals use. This is simple, logical, and accurate. You can calculate your own requirement after this. Step 1. Start with the family expenses. Only include what your family needs to live. Exclude your personal expenses. So, here's a sample calculation. This helps you understand how numbers build up. Most people underestimate this stage. So here you have a monthly expense of 45,000. So it is calculated on a yearly basis. It becomes 5 lakh 40,000. Next, step 2. Multiply by income replacement years. This means how long your family should be financially secure without your income. So if it is in young kids, approximately 20 years, teenagers around 10 years, and no dependents. no dependents, it will be less. So, on average, now I am taking an example of 20 young kids, 20 years. So, your yearly expense was 5,40,000 into 20. That gives you a figure of 1.08 crores. So, next is the step 3. Loans don't disappear if you disappear. So they transfer to the family. So we must add the liabilities. Example loans. Notice how quickly the required amount increases. This is why random insurance amount do not work. Now you have total loan of 40 lakhs, so you have added it. That makes your total coverage to be 1.48 crores. Now, next step is to add the future goals like education, marriage, medical expenses. For an example, if your future cost is 30 lakhs, including all your goals, so what happens again? Your amount increases by another 30 lakhs. This gives your new total to become 1.78 crores. So once we include the goals, the number becomes more realistic and not exaggerated. Step 5. Now we subtract the existing assets because insurance should only cover what is missing, not what you have. So when you do that, your if you have an assets for 28 lakhs, so we subtract that, which gives the required cover to be 1.5 crores. So this final number is the true protection amount. This is what we call calculated insurance and not any guesswork. So there's another example. Ramesh had 5 policies. He's, he still felt secured, but total cover just was 22 lakhs. Multiple policies do not guarantee adequate protection. So the insurance is not about how many policies you own. It's about whether the amount is enough. We carry a lot of myths about the insurance. So many people even now, when I meet them, they say that yeah, we have company insurance. But the moment you leave the job, it disappears. So it should never be your main cover. This is a very important concept about insurance that none of the people understand. They think that they are secured because they have the coverage from the company. In this world where nothing is very stable, what happens tomorrow or what happens the next moment, nobody knows. So in this situation, and you can see many people, they lose jobs and it takes time for them to gain another. So what is the time gap between those? Where are you insured? And your emergencies don't come with an invitation. So always the company insurance should be the secondary. So next myth is young people think they don't need much insurance. Actually, they need more because they have more earning years remaining. Next myth 3. Plans that combine insurance and investment usually do both poorly. Protection and wealth creation work best when they are separated. This is also a very important concept that most people don't understand. They say that, yeah, I'm getting insurance as well as I'm getting investment. No, both these are like two different poles. They will always repel each other. So it's always like insurance should be taken for your security and investments is for your emergency and your goals and needs. So next, here's what you should do after this session. Not next year, not some other day, but today. Calculate your requirement, compare your existing with the existing policies, find your gap and fix that gap. Financial protection always feels unimportant until life proves it otherwise. Preparation is peaceful, regret is stressful. Right life insurance amount doesn't just protect your family financially, it protects their lifestyle, their confidence, and their dignity. If you want help calculating your exact insurance requirement, you can connect with me and I will help you calculate your number clearly and correctly. You can comment insurance to book a clarity call for free with me. Thank you.